Hey, good morning, everyone. Welcome and I hope this Friday finds you ready to explore the weekend and dive into something special. For many of you that I've been talking to this past week, it's outdoor stuff that you're looking forward to getting done and planting gardens, getting your salsa garden ready to go for this summer, spreading some mulch. I know that's on the Shreve's list. We've got to spread some mulch. And for all of you who have people graduating coming up, graduation parties, um, man, I hope you saved up for them, because everybody I talk to has got to like repaint a front door, do some edging, fix the gutters. I mean, yeah, it's these types of events that cause action. They spur us into action to make change. And so, got the safety disclaimers up there for you. Top on the list is a new one for me. We bought a little used convertible, and I had the top down this week at a coffee shop, and a good friend of mine comes up to me and says, "Hey, uh, learn from my experience. You might want to close your convertible top every time you get out of it." He had a pop-up storm come through when he was inside Target and ended up with soggy seats. So, these are the things. We need each other. We need each other to help us out along the way. But lastly, these thoughts and opinions are those of Gimbal Financial. And you've just got me today. Keith is traveling with his daughter, Kristen. They are traveling to Arizona to check it out. And one of the greatest things that I've seen Keith do over the years is give his kids the green light to explore and to do the things that are on their radar. And then he and Connie back them. Sometimes they even pour gasoline on it. So it's pretty cool. So the thoughts and opinions are those of Gimbal Financial. And that rings more and more true every day, just because I was watching an interview that Keith shared with me on Elon Musk. And Elon Musk was interviewed, I believe is by NBC this past week. And they were asking him about free speech and why he says some of the things that he says when it could cost shareholders. It could mean less sales or deliveries of Tesla. Why is he so vocal about his opinions? And if you can find the interview, it's a great one to watch. He basically just pauses, almost stunned at the question. And the idea is we all have ideas. Why not share them? And so that's what we hope to do here. We hope to share our ideas and our views on the stock market and what we're seeing out there. And so we'll be doing a little bit of that today. I'm going to jump right in to the markets. And before we do that, what do you think of this view? Not bad, huh? This is the office. If you've been here, you've seen this view. But if you haven't been and you want to fly in, we've got chairs for you to come and sit down, and we would love to have you. We don't get too many office visitors these days. I think COVID just kind of shook things up in that aspect. But I always love it when we get to see each other eyeball to eyeball, and we could talk about the financial things through email. We could share spreadsheets. We could look at account statements. You can look at values online. Um, but when we get together, we talk about the heart of the issue, the why behind the money, the why behind the balance sheet, the why behind the cash flow projection, or the or whether the needle is moving or not. We get to talk about the heart of the matter, and that's just always great to do with you. So I'll go ahead and share a screen. We'll take a look at the stock market. Let's see here. Okay, so what we're looking at is we're looking at the S&P 500 index, and this is the largest 500 companies in America, and many of these are global companies. Their reach is large. They have amazing accounting departments that are trying to reconcile dollars, yen. They're every night they're reconciling how much money the company is making or losing. Their sales have a far reach, and so these are just big companies. And as you can see, we're starting to see something that is powerful. And I'll switch my line to a pin here. Here we go. Okay. You can see this bottom line trend. We hit a bottom in the market. This is back in, oh goodness, October 13th, 2022. And we have not retested that low since. And so that's been very encouraging to see that we've been making higher lows, made a higher low here, higher low here, higher low here. And we are starting to see the S&P 500 show some strength right now, right at this level. And that's been very refreshing to see as we had a sideways market for several days. I want to zoom out our scope and take a look at a weekly chart of the S&P 500. And in this weekly chart, what you see is a bigger picture. And what you can really see is kind of a reminder that markets work, stocks work. And we had such a great run, and this is 2016, 2017, 2018, 19. This was the COVID pandemic right here. This sell off down to 2191, and then golly, that was a V-shaped recovery, is what that's called. You can see the V there. That type of recovery isn't typical. To see that type of robust strength come off as such a big decline. And so a V-shaped recovery happened in March and April, June of 2020. Keith drew a green line. You see this big, long green line ascending upwards. And basically what that tells us is that the majority of stocks were trading above their 200-day moving average. And that's a positive sign that we like to see. We like to see stocks above their 200-day moving average. That tells us that shares are the voters, the buyers of shares are remaining consistent. And so here you had several months of just strong buying. And then we get into the year 2022. This was the last trading day in 2021, and we pretty much hit the high at 48.18 on the S&P 500. And since that time, we've been in a downward trend. And so that downward trend is easy to see on this weekly view of the S&P 500. Starting to level off right now. This is where we are today. And what we'd like to see is we'd like to see this stay above its 50-day moving average, which is this little red line. It's kind of hard to see, but for the past several weeks, the S&P 500 has been above its 50-day, and that's been good. It's been led primarily by technology stocks, and for you that have been on this call for several times now, when we look at technology stocks, we are mainly talking about the NASDAQ. And the NASDAQ's a much larger group set than the S&P 500, looking at about 3,500 different stocks in the NASDAQ. And this index has just been, it's been leading the way. Flashback to the S&P 500 real quick. Okay, starting to see some strength here. Now we're going to forward back to the NASDAQ. Do you see the difference? This trend, right? This near-term trend here, it has been very robust, and we've had a good week. We've had a good week, and that's on top of all this really negative news out there. If I just watched the news or stayed focused on whatever my favorite web page is for news information, um, it would be hard to be optimistic. And if you can't be optimistic, it's hard to see opportunity. And so what do? We go to these charts and we look and we say, okay, where is the money going? Are the buyers coming in and purchasing? Are they selling? What does this look like? And so the news of Russia or China or the debt ceiling or Trump on CNN or a recession or whatever Elon Musk said on Twitter, that's background noise. We pay attention to price. Up here on the NASDAQ, here's the most recent price. We pay attention to volume. How many buyers are there? How many sellers? And that is our guide. That's our guide to how we make our decisions. And so this has been a good environment here recently to start making some decisions. And and with this, it takes a lot of fortitude just to stay patient. And even though we've been seeing some positive movement in the S&P 500 and in the NASDAQ, we want to see patience still. I'll go ahead and switch over. Some of you know that I like to talk about the small cap index. Again, when we talk about small uh, cap stocks or mid cap stocks, these are still big companies. I mean, they have jets. They are the movers and shakers, and so you can see this small cap index, and it just has not been performing well at all. If you have a 401k or you had a 401k while you were working, many of the 401k platforms today give you the opportunity to buy into like a either a lifestyle fund that says at this target date I'm going to retire. So if you've got 30 years to your career, basically it would say, okay, in 2050, this is your retirement date, therefore you can be aggressive. And it would have a number of these small cap stocks in that investment mix. Well, you can see that even if you want to be aggressive, that's fine. But the trend of this has just been very difficult. Look at that. We had a little outlier come through in January, and it just gave up the ghost in March. And so the trend on small caps has been down. It looks like it's trying to punch above its weight, and it's already crossed over its 50-day moving average, which is the first sign of health. It's got a little ways to go to its 200-day. You might see by my little yellow box there, it's about 3% away from its 200-day. And so that the S&P 600 still has a lot to prove. It just has not been as robust as the NASDAQ or the S&P 500. Some of the other things that we like to use to gauge the health of the stock market are the volatility index, and I'm going to go ahead and pull that up here. Okay, here it is. This has a lot of tall lines. You see the tall vertical lines? Those are the prices on any given day. And so this has a lot of looseness to it. We like to see prices tighten up, where you would have short vertical lines where the price is being argued back and forth amongst pennies instead of $100 bills. And so this is a picture of the VIX, and when it is lower, that's typically better for stock market investors. When it's higher up here in the 30s, that's when it's pretty tough. And you can see the correlation, how we're low on the VIX today, and the S&P and the NASDAQ have been looking a little more healthy. If I zoom out to a weekly view, this might be helpful to just say, okay, well, what has it looked like historically? And if you look to the left of the screen, this goes back to 2016, and you can see a nice downward trend as you follow my mouse here from left to right. You see a nice downward trend, and the VIX got pretty low. And during that time, the market was just ripping, and had a great market to work with all the way here through 18, 19, and then of course, like we talked about and touched on earlier, in late February, early March 2020, COVID pandemic set in, and the VIX shot up. Look how high it shot up, 85, I think. I mean, just unbelievable. And then V shape, well, I guess this would be kind of an A without the crossbar. it went it went up and then came back down. And then we've really been fighting this 20 level for some time. So it's been good to see the VIX trending downward, and hope returning to the marketplace. And I go back to our NASDAQ view just one more time. This is the strength. This shows you what's happening. And then keep in mind, this is a nice reflection of what's going on in business today. These are innovative companies. Yeah, it's software, it's artificial intelligence, it's biotechnology, it's financial technology, fintech. I mean, this is cutting edge stuff, but it's also cutting edge service. And so if there are services, or if there are products that are cutting edge, these types of companies land on the NASDAQ. So I always love to look at this just to see how innovative America is right now. Last thing I'll share with you on the market as I switch screens. We have a few different indicators that we look at. Keith has come up with one that we shared earlier, those green lines, which talk about, the number of shares that are above their 200-day moving average. And one that I like to look at on a regular basis is, let's see here. That's my friend Blake. I might talk about Blake in a little bit. There we go. Okay. What we're looking at is this is the S&P 500. It's a really cool chart if you're a nerd like me, because it shows the S&P 500 stocks above the 200-day moving average. And as you can see, that's about 48%. And we can go back in time. I mean, this is the past year. If we go back 2 years, you can see, we're a little lower than where we were back in the summer months of 21. And then I like to do this. I like to say, hey, what's the max look like? What does it look like if we just zoom way out? Well, this takes us back to 07. Okay. And so that 49 is kind of right here in the middle, as you would expect. During the pandemic, that V-shaped recovery, when things were not looking so hot, several of the stocks inside the S&P 500, I mean, I think it got down to like 5 or 10%, under 10% of stocks were outperforming their 200-day moving average. And so that just tells us, hey, it's okay to stay away and to take a look at other options. Maybe use money market for a little while. We don't talk a whole lot about bonds on the call, and it's not because we don't like bonds, but bonds typically, as interest rates are rising, bond prices work inversely, and they're coming down. And so where bonds can be a little more attractive, that could happen if we were to ever have a rate cut or a couple pauses. But for now, many of you have seen the benefit of the rising interest rate market in your savings accounts, your money market accounts, your CDs, and the rising interest rate market has been very good for savers. And so many of the people we talk to are just they're great savers, and it's been good to see you getting some reward for being a good saver. Um, One of the pro tips, investing, financial planning pro tips that I wanted to share with you, I was reinforced to me this week. I was on the phone with a very good friend who happens to be an estate planner, and we were just talking through what does estate planning look like in 2023, and um, just like a lot of things in life, the more you know, the better equipped you are to make a decision. However, you still have to make a decision. And he was sharing that really for the majority of people, they just don't have an estate planning problem anymore. Um, the amount that the federal government allows you to pass is close to 13 million per individual, and then maybe you're watching from a different state, but here in the state of Indiana, the estate cap is 100 grand, and so unless you have something to report that totals up to be $100,000, you don't have an estate problem. Um, and so, if you had a really high-end sports car or art collection or something like that, yeah, then you might have to. But things like your house, you can, through a beneficiary designation, you can title your house to go to someone, and beneficiary designations help you avoid things like probate. And so if you haven't taken a look at your beneficiaries recently, I would encourage you to do that. And we have beneficiaries for you on file here. If you want to just double check those, reach out to Amanda or me, and we're happy to track those down for you. But you might take a look at the other assets that you own and say, hey, what could I do to have a will substitute, a beneficiary on these assets? And those would include the house. Those would include your bank accounts, which would be titled as a payable on death. It could include any investment account that's not in a retirement account. Those can be have beneficiary designations through a transfer on death, just like your house. And so take a look at that. And if you're in a different state than Indiana, you might reach out to an estate planning attorney. If you're in Indiana, you might reach out to one anyway. But I just want to share these heads up with you because there has been some very positive changes to help make life easier on the estate planning side, and that's a good thing. Advice for young people: last week we talked about sweaty startups and getting out there and doing courageous things, maybe just not settling for the minimum wage job, but getting creative uh, could really, well, if there's something that stokes your fire, you could get out there and do it. Now, if you want to go work for somebody, again, that's great. You're going to increase your social scope. You're going to make friends. You're going to have some amazing experiences. You're going to have some really funny stories, and that's all good. But one of my thoughts for this summer, because we got 1 week of school for most of you. Um, One of the thoughts for this summer is just to encourage you to be active. And being active could look like getting outdoors, going on trips. But I thought specifically, if you went to oh, what's the name of the purple gym? Planet Fitness. Yeah, I guess this is a plug for Planet Fitness. I think it was Planet Fitness. They have some type of deal for young people, if you're a student, where you can have a summer membership. And it's either free or really cheap. I can't remember. But you might Google that, or you might find a CrossFit gym and become part of a community where you're working out, where you're getting outside, and you're meeting people and you're taking care of yourself. because it's too easy to waste time doing nothing, sitting down and looking at your phone. So if joining a gym could be a really cool thing, that could be a great confidence booster for you. Maybe you've never lifted weights. I don't know. Um, that could that type of confidence could stack and transfer over to your family, your brothers, sisters, mom, dad, grandma, grandpa. Everybody could see what you're doing, and that could be pretty cool. So um, be active. And um, if you don't want to join a gym or something like that, maybe it's a goal of I'm going to ride my bicycle for 100 miles this summer, or I'm going to go on a 100-mile walk around my city. Something like that. Just do something courageous that gives you some bragging rights and a story that you can share with other people. That could be uh, a nice spark to a great summer. And the last thing I would encourage you, advice for young people, is your mom and dad, they love you, and your grandparents love you. And sometimes it's so refreshing. Well, not sometimes. A lot of time, it never gets old. Uh, when one of my boys is like, "Hey, Dad, let's go do this," and then I ride their coattails. And so what that could look like is, "Hey, Dad, let's go out to lunch. Hey, Grandpa, let's go out to lunch. Pick me up in your car, or I'll pick you up in my car, whatever." But lead the way. Maybe it's a day trip. You go over to Cincinnati for a baseball game, or you run up to Shipshewana like Keith likes to do, and into Amish country. And so lead the way and invite your parents, your grandparents, or maybe even your siblings on an adventure. That that's dreaming big. That's doing things um, that just normal people aren't doing. So anyway, thanks for joining us this week. Mother's Day was last week. I forgot to say Happy Mother's Day to everyone, to all you mothers out there. We are so grateful for you. And that's part of the joy of being at Gimbal Financial. Gimbal Financials, we have a culture where we want to walk through life with you. And so we're grateful for all the moms out there. If you're looking for a good Father's Day present, um, I recommend that you write a letter to your kids. Other than that, guys, have a great week, and we'll be back next week. Looking forward to seeing you then. Bye bye.